Unlock the high returns of the expanding venture capital world right here on the Emerging Managers Podcast.
Scott, we had Eric Minnick on from Versus VC, and Versus Ventures is like really broad in the kind of computer science startup, like the areas that they tackle from gaming to sports tech to fintech. And there's crossover between all of their investments, which I found interesting.
Yeah, the reality is he understands that there's a correlation between sports tech and gaming tech and fintech because there's transactions that take place and payments that take place. So I think you have to understand of the entire technology stack and ecosystem, within these related industries.
Well, and Eric has a background in software development, university research, angel investing. So that's like kind of got a little broad brush look at all of that too. So he understands that connection.
Yeah, he does. And obviously he spent some time, at a high level of sports. So he understands, as a participant and a player. So
that's so true. Versus VC is currently raising its first fund, which is $10 million, and plans to expand to a larger fund too. I found that really, ambitious, I guess, that you were just going to go immediately into a round two. Is this common?
Well, a lot of times you'll find that when you're a new manager, you start with a smaller fund to build your concept and then build a track record. Obviously, in the scheme of things, a $10 million fund isn't a lot of money, but it allows you the opportunity to really play with real money as opposed to monopoly money and make investments. And you move away from theory and make some practical decisions. And I think what a lot of times, what I found, these founders of these funds, they start with a smaller fund, hone down their thesis, hone down their due diligence process, hone down their deal flow process, and then use that to move on to the next fund. In many cases, too, they may use the second fund as a follow-on investment for companies they may invest in their first fund.
Well, let's hear all about their investment thesis. Let's hear about this first fund, and we'll come back and talk a little bit about our takeaways on the other side.
Well, hello, everybody. My name is Scott Kelly. I am the founder and CEO of Black Dog Venture Partners, the host of VC Fast Pitch, and your host today for the Emerging Managers Podcast. And I'm excited to bring in Eric Minnick on the podcast today. Eric, welcome.
Excited to be here.
Awesome. Well, Eric, when we start this, before we get into the fund, maybe share a little bit about your background, personal, professional, before you launched your fund.
Yeah, for sure. So I guess my formative years, I was a big wrestler. So that ended up kind of getting me to Stanford. I was on the wrestling team there at Stanford. I also studied computer science. And then, once I left school, once I graduated and started my career, I've been around startups the whole time. So I started my career as a software developer at a venture-backed FinTech firm, and then left there, got my MBA, then started my own business, commercializing some university research, building software to help kind of small to medium-sized manufacturers improve the reprogrammability of their automation, and hopefully be able to kind of install more automated systems to increase their efficiency and things like that. And as that wound down, I started doing some angel investing and spun that up into a family office that I ran for about 7 or 8 years called Andover Ventures. And about a year and a half ago, a little over a year and a half ago at this point, I decided to launch Versus Ventures, which is kind of taking the thesis that I honed at Andover and opening it up to a broader capital base and hopefully, writing larger checks and having the opportunity to grow from a one-man shop of a family office to a more institutionalized firm that has a larger team.
Awesome. Well, why don't you jump into the thesis? Share a little about your investment thesis, where you come in, where you invest, how you invest, and the like.
Yeah, so I invest pre-seed and seed in gaming, sports tech, and fintech, and kind of the intersection thereof. And so there's a lot of, in my opinion, a lot of kind of crossover between those sectors. Whether it be kind of some of the gamification principles and viral loop that consumer fintech apps have kind of taken from gaming, or whether it be kind of the infusion of Web3 or kind of ad tech into both the sports tech as well as the gaming spheres, and all of them in a lot of ways are really dependent upon engagement and user engagement. So I spend a lot of time looking at kind of different user engagement tools in gaming, fintech, and then as well as in sports tech. I spent a lot of time looking at kind of ticketing and things like that as well. And so typically I'm kind of involved in the first or second institutional round that a company will raise. My check is more often than not kind of a co-investment with a larger fund. And then, how do I work with the founders or kind of what's my involvement is very dependent on what the founder wants. So, I have experience running a business. I have experience on the tech side. I mean, I've seen a couple, mergers and integrations of those kinds of companies and things like that. And so for some portfolio companies, that means I've helped with things as granular as equity compensation plans and things like that. And sometimes it's more on the kind of code stack or the tech stack, kind of algorithm reviews, things like that.
Why did you choose sports tech and gaming tech? Why those particular industries and focus?
So I'm very passion driven in terms of kind of where I invest. And so these are the sectors and industries that I would be or was kind of reading about, being as involved in as I could on a non-professional basis. And so when I had the opportunity, when I was kind of coming up with Andover and what that would be, and ultimately, transitioning that to Versus, those were the sectors that I thought I wanted to spend the most time in. And fortunately for me, they're also sectors that are growing at a significant rate, and they have a significant capital basis to begin with. And there can be venture scale businesses built within those industries. And so that's how I ended up at them. And, it's fun to talk to the founders and the people who are shaping the future of those industries. And it's fun to be involved in the small capacity that I am.
And that leads to my next question. Why your fund and why now? Talk about what you touched on where the industry is going. And obviously, gaming and esports have had a bit of a roller coaster ride. And obviously, sports, from a franchise standpoint, is blowing up. But maybe share about why your fund, why these industries, why now is the best time.
For a lot of these industries, 21 was kind of a high water mark of valuations and things like that. And we've seen a much needed reset in terms of that. And so why now in part is it's a great time to be investing in those businesses. There's great founders who are building it at great businesses at reasonable valuations, one. And two, there's a real talent opportunity in terms of kind of some of the larger game studios have downsized a little bit. And so there's really great talent both on the founding side as well as kind of on the early team side. So there's the opportunity for really great projects to be built within these kind of different sectors. And another reason is I think there's a lot of trends that are pointing towards these are going to continue to grow significantly. I mean, if you look at some of the trends in applications of AI that are helping improve development speed and also kind of keeping costs down. You look at kind of the opportunities that are coming up with AR and VR. I think those are extremely interesting potentially as well. And, and the mobile market continues to grow, and there's always kind of new users in there as well. And on the sports tech side, we're in this great infusion, there's so much data for a personal health perspective from a fitness tech side. I mean, I have more data about how I sleep and what I eat and all of that than when I was competing. I wish I had some of this data, 15 years ago, 10 years ago. But now the question is like, well, what do I do with all of this? And so there's a lot of opportunity to kind of be built around that from the fitness side and kind of connect consumers with people who are in the know and let them kind of proliferate their base. And the same applies to kind of professional athletes as well. And then on the team side, those data valuations, those valuations are continuing to grow, and those teams seem bigger than ever. But on the flip side, they're not collecting that much more data right now than they did 30 years ago, right? Like they still don't know how I go and I spend and I consume at the arena as a fan, things like that. And so there's just great opportunities set to kind of build loyalty programs, build kind of the data set that the teams are collecting to then further monetize and engage with the fans like myself or the millions of people in the US and across the world who are huge fans of different sporting teams. And so those are part of the reason. And then on the fintech side, a lot of the things I talked about as well still apply as well. I mean, the AI component, I think, especially on the fintech side, is a logical outcome of the big data boom of kind of, the last 20 years. now we have all this data. Now we've built all these models on top of it, and now kind of it being able to self-sustain itself a little bit, and kind of be more of a application area where artificial intelligence can help founders and help users in a way that it couldn't before. I think VR and AR is an interesting application area in business as well, whether it be e-commerce, virtual shopping, things like that, or it be kind of an extension of the work from home, or you can kind of be a little bit more engaged, have an avatar, something like that, where you feel a little bit more immersed in the work environment without leaving the comforts of your home.
Let's talk about the portfolio. Obviously, you've been making investments in the space for a while. Maybe do a shout out to some of the companies that are doing great. Any success stories you want to share within the portfolio?
Yeah, look, I feel great about where the Versus portfolio is right now. So we have 17 active portfolio companies. The growth has been great. I mean, we've had Muse Collective launched their game, a fashion game. We had Dwarven Realms has launched the first of their kind of platform of games, and it's performed really well. We had Every.io, which is a AI kind of accounting and compliance tool for small to medium-sized businesses. They raised a significant Series A from Redpoint Ventures, which has been really fun to kind of just see their growth. And we have companies like the College Sports Company, which is partnering with a number of well-known athletic departments and helping them kind of build additional revenue streams and additional kind of media platforms. And then finally, I had a lot of fun this year. I invested in Matthew Barry's fantasy life business, and they as part of that acquired Guillotine League. So I was in a Guillotine League with a bunch of other investors and Matthew himself, and it was probably the most fun I've had in a fantasy league in a long time. And so, I feel great about and those are just a small portion of what's in the portfolio, but I feel great about where we're going, and we have a lot of traction within the portfolio, and so I feel really good.
Well, when you made these investments in your current portfolio, I mean, was there a compelling reason that you invest in these companies versus probably the hundreds that you see on a yearly basis?
Yes. Ultimately, the first thing that gets me excited about a business is the founder. I'm investing before there's customers, sometimes before there's a product, right? And so what I'm really looking at is, okay, is this someone who can build this? Does this person make sense in this industry? Why do they have a unique edge? Why are they going to be able to build this? And that's the really fun part for me. I'm just assessing the teams and what they're building and why they make sense for what they're building. And so, ultimately the answer to that is the differentiator between them and the other companies that I didn't invest in is the team and the comfort level I have around them being able to build what they've said they're going to build. And so, that's part of what just gets me so excited about where we're going.
So from the fund side, tell me about your LPs. I mean, how did your LPs come to you? What are you looking for in an LP? Obviously, cash is king, but what other attributes make up your LPs?
Yeah. So far, most of my LPs are high net worth individuals. They're excited about the industries that I'm building in. They're also excited to talk about the different portfolio companies and why they're fun and things like that. And so that's some of what drives potential LPs to me is, I do invest in fun industries. And so they're good dinner conversations. So that never hurts. But what am I looking for? I love having other founders, people who have been through a little bit of this, in there with me from value add, kind of having conversations with them as I look at companies' perspective, but also them understanding kind of how the business works and what goes into it. Ultimately, unfortunately, not every company that I invest in is going to be successful. That's just the nature of the industry. And so people who understand that coming in is something that is important to me. And I like to chat with my LPs. I like to kind of leverage them if there's something that I have a question about, or if I'm looking at a company that I think is similar to something they've done before and kind of getting their opinion. And so, people who are excited about that is something I look for as well.
So tell me, what do you look to happen in the future for Versus? What's next?
Yeah, I mean, finish raising Fund 1 first off.
Share a little bit of background about from Fund 1, where you're on the process.
Yeah, so the goal is to raise 10 million. We're about halfway there right now. So I'm both fundraising and actively investing. Hopefully in the next 6-ish months, we'll be done fundraising. Then we'll have kind of go through the investment period, and then we'll be on to fund two.
Mhm.
And so the goal for fund two is to be bigger. Hopefully, kind of 25 million plus, and bring in some additional people as part of that as well, whether it be another partner, whether it be some kind of principals and associates and things like that. And the goal ultimately is to continue to grow Versus into a fund that can live beyond me, can live beyond kind of the amount of time that I'm going to be running it. I mean, I'm still pretty young, so hopefully that's for a long time. But yeah, no, I want to grow it into a brand name fund that is active in these industries for a long time and continues to kind of help founders realize their dreams through capital and the value that we can add.
Awesome. Anything else you want to share?
This has just been a really interesting and fun journey. It's been really eye-opening, kind of some of the differences between a family fund and running kind of a institutional grade fund, and some of the differences and some of the kind of mechanisms I've had to put in place and things like that. And so it's been a really interesting journey, and I really don't want it to end anytime soon. This has been it's been great, and as I said, these are industries that I'm passionate about, and I really love kind of talking with founders and meeting with people within the industries. And so it's been a great journey so far, and hopefully it's just the beginning of, as I said, kind of spelling something more substantial.
Great. Where can they learn more, either as a potential LP or a potential founder?
Yeah, so versusvc.com is the website, and there's an opportunity there to look at all the portfolio companies that we have right now. We can click through, find information about them. There's more information about myself on there as well. And then there's also contact me form. As I said, there's one person on the team, so that actually comes directly to me. There's no, and yeah, you can check me out on LinkedIn, and I'm at Minnick on X if you want to see a bunch of Eagles and Phillies and college wrestling retweets. That's a good place to find me. And yeah, those are kind of the places that you can come and look, or as I said, reach out to me, and I'd be happy to chat.
Well, I think I know the answer to this final question. Chiefs or Eagles?
Go Birds!
Yeah, fly, Eagles, fly. That's awesome. Well,
Absolutely.
Eric, thanks for joining us today. And like I said, if you love these podcasts, please subscribe. We'll be posting these out over the next couple of days. And Eric, I look forward to having you. And good luck to you.
Thank you.
Scott, I thought that the investment focus on user engagement tools was a really interesting thing, but I think he's so right, especially if you're in sort of that sports and gaming side of things. If you don't have active users, you really don't have a platform.
Well, and quite frankly, you don't have a business. Because the reason why these platforms exist is to engage users. And so if you're looking at, one of the paramount things that have to take place is user engagement. So because they don't buy things, they don't do in-game purchases, they don't share it until they're engaged.
Yeah. I think there was such a previous focus, maybe, 5 years ago, on just user acquisition in general. And now we're really at this, let's make sure they're active users.
Yeah, it's definitely changed from a method of getting quantity versus getting quality. And you can have, I mean, everyone would you could brag about how many Instagram followers or how many downloads, how many subscribers, but if they're not doing anything, they are probably more of a burden than a benefit.
Yeah, absolutely. Well, I thought that it was really interesting that he thinks that this is such a good time in the marketplace because not everybody, some people are a lot more skeptical about it, but he really is saying that he thinks that the availability of talent is a really big deal right now, and having your pick and your choices of that. Trends that are going on in AI, AR, and VR right now have
Sure.
gotten very mature as well, and more reasonable valuations. So, I think he's right that that's a good market mix right now.
Yeah, I think you're going to find in this interview and others that, obviously AI is going to play in a lot of different areas, and we've had interviews where AI is, helping determine what healthcare is going to be like or what medicine is going to be like. And I think AI is going to really play into the industries of Ericsson because it provides efficient use of capital. And, today companies can scale, without headcount. or as much headcount. And Eric obviously understands that and is taking advantage of that.
Yeah, absolutely. Do you think being a brand name fund, that's his goal? That's what he said, that he wants to be a brand name fund. I don't know. I think there might be some benefit to being under the radar.
Yeah, that's probably true. I think there's being stealth has some advantages. I think from Eric's standpoint, and honestly, a lot of the managers we're going to discuss is that they're going to be able to get in front of the brand names before they become brand names. And you find a lot of times with these larger funds, they may not be they may be investing in the brand names, but they're investing at them at the much later stage where, quite frankly, all the alpha and all the return has been evaporating to the most part. And so Eric and these other emerging managers understand, okay, if we're going to be successful, we have to get in the brand names before they become brand names. And then we have to be proactive in making them brand names.
Yeah. I think sports, fitness, like some of these areas to invest in are a little more exciting tech, more fun tech. I don't know. That's not a term, but my term maybe, fun tech.
Sure.
That makes it actually a little bit easier though to go and talk about and get visibility for the ventures in your fund.
Yeah, it's easier to explain what the business is if you are providing something in esports or sports tech or fitness tech. Obviously, it's not a large reach to communicate what that is versus some biomechanical, technology. Absolutely.
Well, you've been in this sort of gaming tech side of things for a long time. What are your thoughts on the industry and the outlook in the market?
I think it's in an interesting phase. I think, it had a really good run. I think the dynamics, of the growth were, like we talked about before, more on quantity of people versus quality of the engagement and the monetization. I think that is beginning to change. You're seeing continual overlap between gaming, gambling, entertainment, sports. You know, um, it's not going anywhere. But like a lot of industries, you get that big surge. I remember when I was in the '90s, I was in the middle of Silicon Valley during all these dot coms, and honestly, you could put dot com on a light bulb and make money. But by the end of that decade, most of them were at zero. And then the ones that really had something and really did something with it. People don't remember, people forget that despite, Amazon being a multi-trillion-dollar company, at some point towards the end of the '90s was a single digit stock price. And people don't forget that, Amazon's doing everything now, but Amazon started selling books. And they had the largest warehouse of books in the history of books.
I
Um,
that you could go back in your Amazon account, you can look at as long as you still have the same account, which I do happen to have the same. It's just changed my email over time.
sure.
But I've been an Amazon customer since 1997.
Right.
And when I bought my first book there that year. And what I looked at 98, because that was really my first year using it. If I look at what I spent in the year, that's probably what I spend in a week now.
Well, I could tell you right now, my girlfriend is on a first name basis with the Amazon delivery
Yeah.
driver.
Yeah, that happens to some of us. My daughters all say, "Oh, mom got it on Amazon." But so this is to build though that kind of traction where you get to that level where a company becomes the go-to place to game, the go-to place to, entertain, whatever that is. You really have to hit that engagement level and you have to hit that active user level and that
Right.
focus. I think it took too long. That's my personal opinion. I think it took a little too long in the sports tech space to hit
I agree.
that model.
I agree. And one thing that was really interesting, when I met Eric at Versus VC, I realized that one of his portfolio companies was Versus, the company that I had helped raise their initial round of capital. And now they are a company generating, tens to hundreds of millions of dollars in revenue. I've raised multiple rounds at much higher valuations. So if there was proof that they understood a trend before it became a trend, versus the VC understood that with versus the portfolio company.
Well, and I think as a founder, that's something that you really have to look for. You really have to look for someone that's going to go beyond the hype and help you get to that next stage, get to the user engagement level, get the funds that are needed to get to that next step too, because
Right.
that's not, you can only do so much without the funds coming in.
Exactly. Well, you know this, two things. Obviously, you know this in the podcast universe and in the App Store, there are literally millions of podcasts, literally millions of apps on the respective app stores that are just there with nothing going on. And the reality is you can build the car, but you still got to have the gas, you still got to have the driver.
That's right. Well, Versus VC and Eric Minnick are really on a path to do this. If you are on a path to do this, you want to reach out to us, check out emergingmanagerspodcast.com. Come find Scott and I on social media. Connect with us. Let us know that you'd like to be the next guest here on Emerging Managers.
Thank you.
Join Scott Kelly, Tracy Hazard, and their high-performing capital fund manager guest next week on the Emerging Managers podcast. Don't miss our upcoming virtual and live VC Fast Pitch and podcast events. For more details, background on our guests, or an application to be our next guest, visit emergingmanagerspodcast.com. Don't miss out on shaping the future of venture capital and entrepreneurship with us by joining our robust community of innovators and investors today.